Everyone keeps asking when the crash will come. When will it happen? How bad will it be? You see it on the news. You hear it from your friends. Your family is worried. And honestly, you are worried too. But here is what they are not telling you. The crash is not coming next month. It is not coming next year. It is already here, right now. While you are watching this video, while you are living your normal life, the crash started. And most people do not even know it yet. They are still waiting for headlines, for confirmation, for someone to officially say it. But by the time that happens, the damage is already done. The early signals are always quiet, subtle, easy to ignore. And that is exactly what makes them dangerous. Because by the time everyone agrees it is a crash, the opportunity to prepare is already gone. Let me prove it to you with actual numbers, not predictions, not opinions, real data. Look at what is happening across global markets. Major indices, dropping fast, not over years, but over weeks. That is your first warning sign. Markets do not fall this quickly without a reason. This is not normal volatility. This is stress in the system. And stress does not stay contained. It spreads. Quietly. At first, then rapidly. Investors begin to pull back. Institutions reduce exposure. Liquidity tightens. And suddenly, what looked like a normal dip turns into something much bigger. Look at Asia. Entire markets losing double-digit percentages in a single month. That is not a correction. That is panic selling at an institutional level. These are not small economies. These are major production centers for the world. When they slow down, supply chains slow down. When supply chains slow down, businesses everywhere feel it. Products get delayed. Costs rise. Margins shrink. And eventually, that pressure shows up in earnings, layoffs, and reduced growth. Now shift your attention to the United States. Many people assume everything is fine because the decline looks smaller. But that is how it begins. Slower, controlled drops. A few percent here, a few percent there. Enough to avoid panic, but enough to signal weakness. Markets rarely collapse. In one straight line, they roll over gradually. They test support levels. They give false hope. And then they move lower again. What you are seeing is not strength. It is the early stage of a larger move. And then you have the global picture. When multiple markets across different regions all start declining at the same time, that is not coincidence. That is correlation. And correlation during downturns is a warning sign. It means the system is connected. It means risk is spreading. It means this is not isolated. This is global. So what triggered all of this? A major increase in geopolitical tension. And markets react instantly to uncertainty. Not because they know the outcome, but because they do not. Uncertainty forces investors to protect capital. And when large institutions start protecting capital, prices drop. Fast. Because they move billions, not thousands. Their decisions drive markets. And when they step back, liquidity disappears. Then comes the bigger issue. Energy. Oil is the backbone of the global economy. When supply is threatened, prices rise. And when prices rise, everything else follows. Transportation becomes expensive. Manufacturing becomes expensive. Food production becomes expensive. every step of the supply chain becomes more costly. And those costs get passed down to you. This is how inflation accelerates. Not slowly, but in waves. One increase leads to another. Businesses raise prices. Consumers adjust spending. Demand shifts. And the entire system becomes unstable. You start noticing it in small ways at first. Higher grocery bills, higher fuel costs, higher utility bills. Then it compounds. And suddenly, your monthly expenses are significantly higher, even though your income has not changed. Now, combine that with slowing growth. This is where things get serious. When economies slow down, companies earn less. When companies earn less, they cut costs. That means layoffs, hiring freezes, reduced wages. And now you have the worst combination. Prices going up while income becomes uncertain. That is pressure from both sides. And that is when people start to feel it personally. Think about your own financial situation. If your expenses increase by 20%, but your income stays the same or becomes unstable, how long can you sustain that? 1 month? 3 months? 6 months? This is why preparation matters. Because once the pressure hits, it is much harder to react. Decisions become emotional. Options become limited. And here is something most people overlook. Inflation does not just increase prices. It reduces the value of your savings. Money sitting in a bank account loses purchasing power every single day when inflation is high. You might see the same number in your account. But what that number can buy is shrinking, quietly, consistently. That is the hidden effect. And it impacts everyone. At the same time, look at what experienced investors are doing. They are not rushing into risky assets. They are becoming cautious, holding more cash, moving into safer positions, reducing exposure. This is not fear. This is strategy. They have seen cycles before. They understand how quickly conditions can change. And they act early, not late. You can also see it in behavior trends. Speculative interest drops. Risk appetite declines. People move away from higher risk bets and towards stability. That shift is another signal. Because markets are driven not just by data, but by psychology. When sentiment changes, everything changes. So, where does that leave you? It brings you back to one simple question. Are you ready? Not for a headline, not for confirmation, but for reality. Because reality is already unfolding. And waiting for certainty is one of the biggest mistakes people make during times like this. Preparation does not mean panic. It means awareness. It means taking small, practical steps before you are forced to take big, stressful ones. It means understanding your finances, reducing unnecessary risk, building a safety buffer, thinking ahead instead of reacting behind, because timing is everything. Acting early gives you control. Acting late puts you under pressure. And right now, you are still in the early phase. You still have time to adjust. You still have options. But that window does not stay open forever. The people who come out of situations like this in a strong position are not the ones who predicted everything perfectly. They are the ones who paid attention early, stayed calm, and took action while others were still debating whether anything was happening at all.